talk about Metropolis. We've got Surendran Chemmenkotil, the CEO, joining in on the show right now. Surendran, great to have you on the show. Thanks for taking the time out. I want to first talk about, what the pricing within diagnostics, because out of your total growth, of about 2 to 2.5%, that actually came in because of the price increases that you undertook. Tell me, how stable are these pricing trends, especially when it comes to the Western regions, wherein the last 3 to 4 quarters, pricing competition has really, intensified?
Good morning to all your viewers. Good morning to you all in the studio. Yes, I think the pricing is getting quite stable in the industry for the last 3 to 4 quarters. We are not seeing a big pricing disruption, unlike what we have seen a couple of years back. So some amount of stability is coming back. And if you look at our growth of 13% last quarter, 7% has come on the back of the patient volume growth, and the 6% has come on the back of realization. And out of the 6% realization, like you said, 2.5% has come on the price revision that we have took from January this year. So we are able to see some level of sanity coming on this particular trend, and we hope to see this sustaining for the quarters to come this year.
And when you say it's going to sustain, are you likely to take some price increases in the coming quarter?
Well, I think we have taken the prices up quarter four last year. So, I mean, nothing immediate, at least for rest of the year. I do not see an opportunity to take the prices up. Normally, this industry in the past, we have seen 18 months to 24 months is a period where one would really look at pricing revision. So maybe sometime in the financial year next year, 26, we may have an opportunity.
Okay. In between, when we had seen those big sharp cuts coming in from some of these online, service providers, we had seen a big rush for the consumers to go towards those services. But over a period of time, of course, quality has started making a big, factor in the decision making. Could you talk to us about how your market share has changed in terms of, versus the other online players, the discount ones?
Yeah, so the health tech players, what they've done is, they've really helped us to expand the wellness market, right? So creating huge awareness and initially offering very discounted pricing. A lot of, upside we have seen on the wellness side, and which has helped everybody else in the industry. So pre-COVID level, we used to have a total revenue of 5% coming from wellness. Today, that stands at almost 17%. So that is one good positive thing has happened in the industry. And now we clearly see that the overall awareness, the need for the consumer to do very regular health checkups is really picking up. And that's really helping us to increase our overall realization. Now, coming back to the impact of these players. Now, well, these all stayed back largely as wellness players, their ability to penetrate into the illness segment, we haven't seen any big movement from that side, because at the end of the day, when you get sick, you will go to a doctor and doctor will tell you where you need to go and do your testing, because, he needs the right diagnosis, quality diagnosis for him to treat his or her patients well. So in that side, because science has always been strength of companies like Metropolis, and hence we always stood, ahead of some of these players when it comes to quality diagnosis, and hence our ability to, get the doctor's endorsement. So our market share on the wellness segment has gone up, and of course on the specialty on the illness segment, we've always been a strong player.
Right. I also want to talk about your expansion plans, because, when last we spoke, you said that you're looking to expand your presence from 650 to now 1,000 towns in the next 18 months and, look deeper into penetration as well within the cities. Tell us if this expansion is on track right now.
Exactly. So yeah, I'm continuing with what I told you last time. So in the last 1 year, we moved from about 300 city operations to now 600, 650 operations. We did a real rapid growth in the last, 12 to 15 months. This has helped us to grow our tier 3 revenues by almost 18% year on year. And we are currently almost 1/4 of our revenues coming from, the smaller towns. That's a good stride. And we continue to take this expansion forward. Like I continue to maintain what I said last time, we wanted to operate in at least 1,000 towns. And the next 12 to 18 months, you will see Metropolis going from 650 towns to 1,000 towns. And that expansion plan is staying as it is. And also what will happen is the 350 cities that we expanded in the last 1 year, we will further expand the volumes there, the product availability, etc. will expand it. And also we'll take the distribution expansion to another, 300 cities, 350 cities in the next, 12 months to 18 months, like I said. So the expansion plan is on course, and we are also putting up labs in some of these tier 2, tier 3 towns that is helping to serve the centers that we are putting up on these towns. So the expansion plan, of course, is progressing very well.
And overall, what's the expectation as to how the margins are likely to trend from here on? Because I'm looking at your revenue guidance. I think you have planned to grow plans to grow around 13 to 15% in terms of revenue growth. But how would the margin picture look like?
Yeah, so the projections around margin also remain as what we have discussed in the beginning of the year. 25 to 26% is the margin projection for this year, and we are on course to deliver what we have projected in the beginning of the year.
Revenue guidance, is it better to estimate and expect that you will be towards the lower end of the range, or you're confident about being at the higher end, or at least surprising the street as well?
No, well, see what happens in the industry, at least for the West and South markets. Quarter 1 is relatively a softer quarter, right? And the seasonality picks up in Quarter 2, and it's getting better as we go towards Quarter 4. And as the revenues grows, that the margins also get better. So we deliver 25% EBITDA margins in Quarter 1, and I only clearly see this getting better in the coming quarters.
Hopefully things will get better, but hopefully there are no further outbreaks, because we were just worried about the news flow around monkeypox and all. Just curious to know, what's the overall testing mechanism around that, and have you seen any pickup in terms of tests for that?
So see, if you're talking about the monkeypox thing, at this point of time, largely the testing abilities are only limited to the government, testing centers. It's not been extended to the private players, but as and when we get the go-ahead, we'll be ready to get ourselves prepared for this. So we are just waiting for the required, go-ahead from the authorities that, we can do these testings, right? So once we get the clearance, then we will talk to our suppliers and vendors and create the capabilities quickly.
Might not be the best news for us, for you, but I hope that we don't need to take those tests in the first place. Thankfully, there has been no case in India so far, and we pray that it is the case going forward as well. But you do have a decent amount of cash balance on the book. Are you looking at some sort of inorganic acquisition? What's the cash utilization plan?
Absolutely. So we are looking for inorganic expansion. We are looking for some acquisitions, right? And we talked about it in the past as well. So see what happens. We have 2 or 3 different categories of acquisition targets in our mind. One, of course, whichever companies which can help us increasing our product offerings by having advanced technology testings, right? So that's one set of target that we have, where our distribution network can further help to expand. And second one, of course, is a good quality B2C, assets in and cities where we want to expand further. That's the second set of acquisition targets that we have. Third one is any underperforming brick and mortar laboratories where our leadership strength and our technology strength can turn it around. So these 3 types of acquisition targets are in mind. We are actively pursuing it. And as and when we get a chance, we will definitely, get, some of these acquisitions. So we're hoping that something should come up as the year progresses. And of course, the cash balance that we have, of course, one of acquisition is one of the, objectives that we will use it for. Otherwise, we also have, some other capex requirements for further expansion.
Okay, so when you say acquisitions is something which of course you've been targeting, and there are these 3-4 baskets and buckets that you look at, is something possible, let's say, in the next couple of quarters itself at advanced stage? Or is there any conversation as such which is underway?
Well, we are in conversation with some of the, assets. These things will take its own time when it comes to due diligence and various other discussions, etc. So one will not be able to exactly time it, the way you want it, but we would like to bring up things as fast as we can.
Okay, good to hear that. Surendran, we'll let you go on that note. Thanks so much for taking the time out and speaking with us today.
Thank you very much.
If you like this video, then like, share and subscribe to ET Now.